Analog Devices just posted a company record 40% revenue jump after the bell today, the biggest quarter in the chipmaker's history. I'm Lena, and here's what moved U.S. markets in a packed post-close session: 3 big earnings, 2 tariff refunds, and a $4 billion takeover fight. Analog Devices booked $4.02 billion in fiscal third-quarter revenue, the highest print the company has ever recorded. Adjusted earnings came in at $3.45 per share, beating consensus by 11 cents. The engine is data center, optical and power products each grew more than 100% year-over-year. Management said its optical communications system business is on track to double again in fiscal 2027. Fourth quarter guidance landed at $4.3 billion in revenue, plus or minus $100 million. Adjusted EPS is guided to $3.86, both figures above prior street consensus. The stock trades near $376, up roughly 54% over the last 12 months. Walmart's second quarter beat on earnings, but the question is how much of that beat is Walmart, and how much is Washington? Adjusted EPS printed at 81 cents versus 74 expected, up 19% from a year earlier. Revenue landed at $187.9 billion, topping estimates by about $1.1 billion. The kicker, roughly $2.9 billion in IEEPA tariff refunds hit operating income this quarter. About $2.3 billion of that was reinvested into lower shelf prices for shoppers. The net benefit still added around 750 basis points to adjusted operating income growth. But U.S. comparable sales missed, and Walmart's third quarter outlook came in muted, the real red flag in the print. Home Depot cashed a $730 million tariff refund, courtesy of a February Supreme Court ruling. $685 million of that credited directly to cost of goods sold in the second quarter. The remaining $45 million is still sitting in inventory and will trickle through in later quarters. Strip out the credit, and Home Depot's gross margin actually fell in the quarter. Same story as Walmart, a one-time cash windfall, not a return of the U.S. consumer. Booking Holdings' second quarter net income doubled to $1.95 billion, up 117.9%. But only about 17% of the pre-tax improvement came from actually running the business. The rest, roughly $1.1 billion, was a currency swing on euro-denominated debt. That's a non-cash remeasurement gain, not operating strength, read the fine print. If the euro moves the other way next quarter, this tailwind flips straight into a headwind. Quick hits from a heavy news day. CSX posted record quarterly revenue of $3.94 billion, up 10.1% year-over-year. Net income rose 21% and free cash flow ran 3.6 times last year's base. CME Group's trading engine slipped, clearing and transaction fees fell 2.6% to $1.35 billion. Average fee per contract eased from 69 to 68 cents, but market data revenue set a record $238 million. Copart is in talks to buy CCC Intelligent Solutions. A $4 billion auto software fight is taking shape. Private equity firms GTCR and Veritas are also bidding, after Elliott built a large stake in CCC in July. TD Cowen upgraded Dominion Energy to buy with an $80 price target, up from $69. The firm puts 70% odds the NextEra Dominion merger closes in the second half of 2027. Here's what to watch at tomorrow's open. The Dominion and NextEra shareholder votes land September 3rd, just 2 weeks away. And listen for chip peers reacting to ADI's data center guide in the pre-market tape. That's LineVest Daily. Full analysis on every story is up now at LineVestNews.com. Subscribe to LineVest Daily for tomorrow morning's brief in your inbox before Seoul opens.